Welcome to ForexTV.com. It's Monday, December 10th. I'm Remy Hokie for your New York Forex Market Buzz. In New York afternoon trade as of 12:50 p.m. Eastern Time, Euro dollar is trading at 170.05. Dollar yen is at around 111.70, while sterling dollar is at 2.0430. Earlier this morning, the National Association of Realtors reported that pending home sales rose 0.6% in October to 87.2. And U.S. equities are in positive territory, with the Dow seeing a triple-digit gain. Earlier, UBS warned that it will write down its prime mortgage holdings by an additional $10 billion. The Swiss bank also announced an injection of $11.5 billion from the government of Singapore and also by an unnamed investor from the Mideast. Joining me this afternoon is Matt Kassel, Director of Proprietary Trading at ING. Good afternoon, Matt.
Hi, how are you?
Thanks for joining us on this Monday afternoon. Well, as the market awaits the Fed's decision on interest rates tomorrow afternoon, we're seeing renewed credit market concerns from DJIA, UBS, as well as the Bank of America. And euro dollar is trading around 147.05. So the markets have priced in a 25 basis point Fed funds rate cut. But Matt, given your fundamental outlook, if you could highlight your take on rate differentials in the current environment.
Yeah, I mean, I think that 25 points is the right estimate. I think that the question really right now is going to remain on whether the Fed cuts the discount rate by a 25 or 50 point move. I'm leaning towards a 50-point base cut just because credit market concerns continue to prevail as we head towards the year end.
Okay, and moving on to technicals and levels for the major pairs. Last week, the dollar index breached the top at 76.15. So if we could start out by looking at your forecast for euro dollar and dollar yen. First, going into the upcoming session, if you could give us your levels of support and resistance for euro dollar and dollar yen.
Sure. Euro right now is trading 147.05. It looks like its break above 146.90 overnight puts the high that was on Friday, which was around 146.70-75, as now as your near-term support, at least into the Fed meeting. And on the top side, we struggled today just above 147.30. A slew of sellers came in, mostly out of Eastern Europe, and that was the same with sterling above 204.70-75. So I do believe that 147.50 caps us at least into the Fed meeting. As far as dollar yen is concerned, there's been just a slew of bad news that's come out with respect to Bank of America, with UBS's $10 billion write-down, MBIA's problems, and all of these have led to the markets believing that yen crosses would come off. But the stock market has reacted in the opposite form, and it seems as if the market is kind of at a neutral point, both in dollar yen and in yen crosses. I do believe that when this resolves itself, it's going to resolve with yen crosses coming in a bit lower, but I think that the market's going to need to get this Fed meeting out of the way and start looking towards 2008 for the next Fed move.
Well, let's take a look at a closer look at the yen crosses. We saw euro yen strengthen and is currently trading near 164.40. So for the yen against the euro and also the high-yielding Aussie, what are your ranges?
Well, euro yen is actually a bit lower. It's around 164.24 right now. I do think that 164.75.80 is a very important resistance level on the top side. From a purely technical point of view, we have reached out of what the Japanese cloud chart deems as necessary to peak out of before we can continue lower. That took place at around 164.2025 on the way up earlier this morning. So now that we've kind of reached those technical targets, I'm willing to look towards the left-hand side on all the yen crosses. I think that one of the significant left-hand cross Aussies to be looking at is the Kiwi yen. People have been buying Kiwi for the last week and a half since the RBNZ came out with a fairly hawkish statement. But if risk starts coming unwound, I think that's going to be one of the first ones to be heading lower. I think there's a significant downside in that after the Fed meeting.
Okay, and last but not least, taking a look at the week ahead after the Fed rate decision, we have inflation and retail sales data coming out in the U.S., but we also do have the SMB rate decision later this week. So how do you see this week's events playing out in price action for the majors, especially for the Swissy, which we haven't covered?
Well, I think one of the important economic indicators to come out in the next 3 to 4 months, as the markets try to get a grip on whether the U.S. is going to head into a recession or not, is retail sales. I mean, America spends, and while they do, GDP isn't going to really fall off the map, and we're not going to get negative growth, and we're not going to get a recession. The most recent data that's come out suggests that retail sales, which comes out on December 13th, is going to be fairly good. This is a holiday market. There's been a lot of stores and franchises that have lowered costs and created deals, and indications are that the number is going to be around 0.5 to 0.7% on the positive side. So I'm not real bearish, generally speaking, on what that's going to tell us for recession in 2008, but I will say that the market's looking at retail sales, and they're putting a heavier weight on it than they have in the previous 6 months. Beyond that, I think CPI, it's the inflation gauge. I don't think it's going to be outside of the norm. We're not looking at inflation really showing any sign of popping over 2.5%. Ex-food and energy, we're looking at 2.2%. Ex-food and energy on the year is going to edge up towards 4.1%, but this is a number that we've all known about. I don't see anything coming from CPI that's going to shock the market.
Okay, Matt, as always, thank you very much for your insight and analysis.
Thank you.
That wraps it up for Forex Market Buzz with Matt Kassel, Director of Proprietary Trading at ING. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.